John's talked about inviting companies that have got cash, enterprise value. I'll explain some of those things. I want to introduce you to my company. It's a biotech company. It's just been renamed. We've got one of the best registers of investors that you will see on the ASX with a biotech company, let alone one like Syntara that's got a market cap of only 20 million. So our market cap is at a historically low level. I'm going to explain to you why and the reasons why you should put this on your watch list and think about this as an investment in the months to come. So we are a company, we deal in small molecule drugs. So drugs that you take orally a couple of times a day. We're global leaders in one particular enzyme inhibition, and I'll explain to you what that enzyme does. We come out of another company. So some of you may have heard, if you've been investing in ASX biotech companies for a while, we were previously known as Pharmaxis. Pharmaxis owned a factory here in Australia. We exported globally. We sold that factory and that business in Q4 last year, and we've gone from 65 employees down to 25. We've reduced our cash expenses by $14 million per annum, and Syntara, the company that's come from that, is now focused on clinical development. And we have not one, but 3 or 4 clinical studies that are going to produce results within the time that our cash will last. So a really good opportunity. We raised money in December last year, so 10 million. And that's what gives us our cash runway. And we're focused in one particular disease area, which is cancers of the blood, in particular myelofibrosis, which comes from a cancer of the bone marrow. And I'll explain a little bit about what that is and what our results are. We've got a drug there which isn't producing its first, it's already shown it can work in one phase 2 study. And we're in a second one that's been approved by the FDA, and we're going to produce results before the end of this year. So if you're looking for an opportunity with an undervalued stock, with enough cash to get through the news flow milestones that I'll talk about, then Syntara ticks a lot of those boxes. So why should you think about investing in us? Well, first of all, I talked about register. This is our list of investors, and you'll notice almost 60% of our register is institutional investors, professional healthcare investors who've done a lot of research and diligence on us before they invested. The second one there, Platinum Investment, is run by a lady called Bianca Ogden. Bianca is probably one of the foremost healthcare commentators in Australia. She went from 8% to 20% in the December raise. She did that after talking to many of the clinical key opinion leaders globally, not just in Australia, but globally, to check to see whether we were going to be there. There's one other fund here which is under the 5% mark, but is somebody who made money from an investment and a company that has just exited from the same disease area that we're in. So a person who's very knowledgeable about the disease area and the technology that we have. So that register would not look out of place on a company with a $500 million market cap, let alone one with 20 million. And they're there for a reason. They understand the science, they like what they see, and they're there for the long term. We've got 7 million in cash at the end of March, but to add to that, we've got another 6 million, which is coming from the sale of the business that we did in Q4 last year, plus another 1 million to come back in a rent rebate, and then an R&D tax credit towards the end of the year. So we've got enough cash to take us through to the middle of 2025. Now then, share price, sitting under 2 cents. We raised at 2.2. The reason why that stock is low at the moment is that we had one major institutional shareholder, Cast Peak, which is a specialist healthcare investor, whose fund had closed. Our stock was the last stock in the fund, and they decided they needed to exit to repay their investors. They did that in January, and all of you know how difficult it is to exit in January. So they exited it at 1.5 cents in a block purchase. So some of that money, some of that stock went into people with sticky hands. Some of it went onto the register, people on the register here. Some of it went into people who are trading now. So there's a bit of an overhang on the stock. When we get above 1.5 cents up towards 2 cents, there's a bit of volume, there's some volatility, but that will wash out. And I'll tell you why it'll go, because of the news flow that we're expecting in the next 6 months. The board, other reasons to think about investing. Who's managing your cash? Who's managing the company? Kathleen Metters is our chair. Kathleen was the head of basic research at Merck, global Merck. So she had a research budget each year that was, I think, above 3 billion. That's how much money she spent. She's a bit of a rock star in global healthcare terms, let alone as a chair of an ASX company, let alone one with a 20 million market cap. She's here because she understands the science thoroughly, likes the team, and knows what we're trying to do. Simon Green was the head of research, plasma research at CSL for 20 years, as well as doing other things at CSL. So again, a really experienced Australian director. And Hashan De Silva, the other director other than myself, is also a commentator and runs his own fund in Australia and is well known amongst all the analysts in Australia. And again, it only invests in companies he believes in, let alone be on the board of one. So a really strong board, a really strong register with cash to take us through to the middle of 25. I'll explain what we're going to do with it. Our drug inhibits an enzyme called lysyl oxidase. So if you were to cut yourself, the body goes through an inflammatory reaction, you get some healing, then the body floods the area with protein strands called collagen. You've probably seen collagen in lots of adverts of makeup and cosmetics and things and whatever you can do, but collagen is basically a protein strand. If you think of it like a fiberglass mesh, if you ever tried to fill a hole on a boat or a car, you can buy it from Bunnings. It's a loose, floppy mesh of fibers. You add hardener to it, and it forms a really stiff, hard skin. That's what our body does when it's healing your skin, a cut on your skin. Collagen goes in. That's like the loose, floppy weave of the fiberglass. Then you add lysyl oxidase, the enzyme, and that's like the hardener. All those collagen strands align themselves and then cross-link, and that forms stiff tissue. So you'll notice if you've got a scar that the tissue in the scar is different from the normal skin. It's stiffer. It's often a different color. It's often raised. That can happen in your kidneys, your heart, your lungs, your bone marrow, anywhere where that fibrotic process goes on. So if fibrosis is a natural process, it's a healthy one, it helps us heal. But if you get too much of it, which comes from too much lysyl oxidase, too much collagen, then what you end is the fibrosis, the scar tissue, takes over the organ. So that organ then becomes non-functional. So we've tried this with 2 drugs, one in oncology, in bone marrow fibrosis, bone marrow cancer, and the other one in skin scarring. And both times in studies in patients, we've demonstrated that the drug is anti-fibrotic. So we can show you that we reduce fibrosis. The clinical studies we're now doing are to show if you reduce fibrosis, what's the clinical benefit to the patients? Do their disease actually get better? Do the organs that were previously fibrotic start working better? Our science, I said we were global leaders. When people do basic research and science, they always try and get it published. You've probably heard the term peer-reviewed journals. These are eminent scientific publications that are read by scientists and clinicians globally. In this case, the top of the pile is Nature magazine. So Nature Communications, Nature Cancer, anything with Nature in the title. That's the highest impact journal you can get. All researchers go to that one first, and if their article gets rejected, they go to the next one down the list until they find somebody to publish it. We've had 3 in Nature magazine, in Nature publications in the last 2 years. So that's a sign that not only is our board great, or our investors great, our science has also been globally recognized by one of the highest impact journals that there is. So our lead indication is in myelofibrosis. This is a cancer of the bone marrow. So the bone marrow is your body's production unit for blood. It produces red cells, white cells, and platelets. If your bone marrow becomes fibrotic, full of scar tissue, then it doesn't, and you become, you have low blood cell counts, you can get it transferred to leukemia as well. So these patients have about 5 years to live. They're currently treated with a drug called a JAK inhibitor, which treats the symptoms of the disease, but doesn't do anything about the fibrosis in the bone marrow. Our drug reverses the bone marrow fibrosis, restores the function of the bone marrow to start producing red cells and platelets again, and gives these patients a potential disease-modifying benefit. Current standard of care sells more than $1 billion a year, just by treating the symptoms. There's a huge need for new drugs to use in combination with JAK inhibitors in order to treat these things. Companies that have had a successful drug in development that have got one step beyond where we are now, have sold their businesses, exited to strategic partners like the big pharma companies for more than $1.5 billion, 3 of them in the last 2 years. So this is a really attractive area, one where there's a huge commercial attractive goal to be hit at the end of this if you can produce data. We're currently doing a study in patients who are on a JAK inhibitor, so it's being used in combination. We've already done a study used in monotherapy, so with the drug being used on its own, where the patients had only about a year to live. In that study, we showed half the patients improved their fibrosis grade. Those same patients also had improvements in symptom score and in blood count. So we know that our drug works. We're now repeating it in patients who are taking the current standard of care, the JAK inhibitor, with the backing of the FDA. We are 60% recruited. So we're more than halfway through recruiting that study. We will have it fully recruited by the middle of the year. So if you're thinking about when do I need to own, when do I need to buy, we will have full recruitment in the middle of the year. At that point, the clock starts, because at that point, there's a time before we start presenting results. We will present results from this study, the first results, in the first week of December this year at the American Society of Hematology. So whatever data we have will be at that conference. That's when the price will build towards that point when we release that data. We will then be in front of the FDA in Q1 next year, and then with 12-month data from this study by the middle of next year, in the same time as we've got cash for. So hugely attractive opportunity, study well recruited, recruiting on time, data to come by the end of the year. Investment in Syntara, though, is not just a one-shot goal. So we have taken the same technology. We're using it in another hematology cancer called myelodysplastic syndrome. You can read these slides afterwards. I won't go into them now. But so myelofibrosis is one kind of bone cancer. Myelodysplastic syndrome is another. The companies that we're talking to about potentially acquiring the drug in the longer term after results will see this as a hugely positive commercial outcome for the company and for the drug. Those of you who have been around in this space for a while will also know Fiona Wood. Thanks, John. Fiona Wood is also known as the Barley Burns Doctor, Australian of the Year, the person behind Avita, the technology that was Avita, was spray on screen. We've had a 5-year program with Fiona Wood in skin scarring. So exactly the same process we're dealing with fibrosis in the bone marrow, we're also dealing with skin scarring. Skin scarring is a hugely commercial opportunity. 100 million people a year seek treatment for scars after elective surgery. And the huge rise in cosmetic surgery is leading to even more need for drugs. There are currently no pharmacological treatments in development to treat adverse scars. So enormous opportunity. We have done a study with Fiona Wood already with patients with scars where they were treated for 3 months with a cream containing a lysyl oxidase inhibitor. After 3 months, we could demonstrate versus placebo, so patients just treated with a normal cream with nothing in it versus the cream with our active in it. Those patients had full inhibition of the lysyl oxidase enzymes at the end of the 3 months. So we're definitely hitting what we said we were going to do. But on top of that, they had a 30% reduction in the collagen in their scars. So Fiona Wood called this unprecedented. She's never seen another treatment that's done anything like that to the structure of a scar. And these patients are in that study, finished last year, but they're still improving now as their skin remodels. So just to complete and wrap up the summary of why you should be thinking about Syntara as an investment, in the deck, there's a list of all the studies that we're currently running. All of those studies are likely to produce data by the middle of 2025, when we've got a cash runway until, with the first of them reading out in December of this year. News flow will be announcing middle of the year full recruitment of that myelofibrosis study, starting the next study in myelodysplastic syndrome, announcing further developments in the skin scarring program with Fiona Wood, publishing the work that we've already done in monotherapy in myelofibrosis, and then in December of 24, only 8 months away, we'll have data out there for the first time with our study, which will be the real value inflection point for the company. I hope I've explained enough for you to have a think about this, and I'm happy to take any questions. Yeah, sorry, we don't have time in 15 minutes to go into everything, but we've got one of our drugs is an anti-inflammatory. It works on two enzymes that you find in the brain. We've talked to a number of neurologists globally. We're not a CNS company, which is why I don't focus on it too much. But the drug is a very effective anti-neuroinflammation drug. When we showed it to neurologists, they identified that there is a disease called IRBD. It's a sleep disorder. These are patients that during REM sleep, most of us are still in bed and we don't shake and move around. These patients actually act out their dreams, and they actually get out of bed, run around, they shout, they scream. 90% of these patients go on to develop Parkinson's disease. So it's the marker that we've been looking for to find how can you, because by the time you're diagnosed with Parkinson's, most of your dopaminergic cells have gone. So you're closing the door after the horse has already gone, if you like. So this study that we're doing is fully funded by Parkinson's UK. They gave us $5 million to do it after screening it and looking at the opportunity that was there. It's been done in 2 centres, one in Australia, one in the UK. We're looking at 40 patients. We've started recruiting in Australia already. The UK site's about to open up. By the middle of next year, we hope to have results which will show, number one, that this drug is effective in the sleep disorder, which it would be a commercial opportunity on its own. And secondly, that it is working on a center in the brain that's known to be involved in Parkinson's and could go on to another study to delay the progression to Parkinson's. So a really exciting opportunity. Syntara shareholders get a great deal. We've got grant funding for the MDS study, grant funding to do this Parkinson's disease study as well. So you're not investing in that, we're investing in the myelofibrosis study.
And well, thank you very much, Gary, for taking us through Syntara. If you've got any other questions, just pop your hand up and I can come over with the microphone. We did actually have one question come through from overnight. You did cover it a little bit, Gary. When does data convert into value? You did go through it a little bit in the presentation, but I guess you're talking the end of 2024.
Well, if you look historically at the ASX and biotech companies, phase 2 data like we have at the beginning of December is normally the kicker. It's the first time that the market gets to see whether the drug is both safe and actually works on the disease in patients with that disease. So that's normally the big kicker. The results that come after that are normally just reaffirming what that first data is. So typically the share price tracks upwards from full recruitment to when you get the data. Some people sell out a bit before they get to the data coming out. Sometimes we get data and then the market drops a bit after that. But that's normally the value inflection point.
Gary, how many shares do you have listed on the market?
David, how many? About 1 billion? Yeah.
Well, just a final quick one. Gary, we do have a sort of a room for all investors here. You have gone through your enterprise value as well. 59% of your stock is owned by 3 major institutions who would have done clear due diligence on you. So, that's what investors do as well. So can you tell us just a little bit more about these funds, the support that they provide your company and how you're in contact with them?
So the institutions that are invested in us, it's not accidental. So some of them I've sought out and some of them have found me. 2 of those funds have invested in hematological cancers before, so came looking for us because they saw the technology we had and were talking to other clinicians to say, look, what should I be investing in? What's new in this area? And they came to us. Other of them have been long-term investors, so they've been with the company for 10 years or more, and they've followed the team that we have, the development we've had. They've particularly appreciated the downsizing that we've currently done and the cash that we've managed to save going forward, and that's why they're still there. And of course, this is sticky money. They're not looking to trade. They're there for the long term. And in fact, I came from one meeting this morning where the first question was, tell me about when you get the trial results and when the next capital you're going to need in the future comes and how we're going to get to the sale of the asset. Already thinking 3 steps ahead, 2 years down the track.
A lot of interest in the company. Gary, thank you for taking us through the Syntara story today. So a round of applause. Thank you very much.